In January of 2022, I decided to put $5 every single day into the stock market because what I wanted to do is prove that even if you don't have a lot of money, you can actually still get started with investing today. So since I've done the $5 a day challenge, I've updated you guys every month, I've gotten some very interesting comments. And I want to talk about one that I can't ignore. It's a very common theme, and it's people laughing at how much money I've generated so far. But they're actually missing a very critical piece that actually leads to a lot of investors not actually making any money. So if the stock market grows on average 10% per year, why do over 90% of investors lose money in the stock market? Goal of this video? Let's become the 10% that actually make money in the stock market. Let's go back to my latest update. I just posted it in July of 2023. And here's a screenshot of that video. And you'll see I invested in VOO. This is an investment that tracks the top 500 companies in America. Now I pulled up my app and you can see how much money I made investing $5 a day. And look at that, total return, $232.12. And that's where the comments came from. That doesn't seem like a whole lot of money. In fact, you invested over $2,700. If you calculate all those $5 every single day, all throughout that period, that's a lot of money to only get $232. But there's a bigger point that a lot of investors that I've talked to that have built million-dollar portfolios have talked about, and it's not focusing on the actual money return. Even if you made $10,000, don't worry about that. Instead, focus on the percentage. Let's zoom into that. Now, we're looking at a little bit of a different thing here. We're looking at the percentage at 8.37%. Now, what that means is my portfolio has grown an additional 8.37%. So I put in money and it grew by an additional 8%. Now, I know a lot of haters out there are going to say, well, inflation is quite high. Well, the idea is inflation should not be this high. It should be at 2, 3, or 4%, not running hot at 7%. The idea is inflation will get under control and we'll get this economy back on track. That, my friends, is what separates the winners in the stock market based on everything I've seen from the losers. The losers are only looking for that quick hit money gain versus focus on the percentage. Let's talk about how this magic actually happens by hopping over to NerdWallet.com. I will link this in the description below. Compound Interest Calculator. This is where I want you to think about if you're investing $5 a day, if you're investing $5,000 a day, whatever the amount is, think about that and plug it into this website to see the power of what's going to happen in the future. And we're going to do $5 a day. So if I take $5 a day times 365 days in a year, that gives me a total of $1,825. I divide that by 12 months in a year, that gives me $152. So what I'm going to do is the initial deposit is $152 and contribution amount will be $152 every month. This calculator doesn't do it by the day, so we'll have to do it by the month. Now, what we want to do is we want to look at the years of growth. This depends on when would you want to use this money. I'm not talking about depriving ourselves just to build up a massive fortune. You should kind of focus on how are you going to use this money in the future. Maybe you're going to save up for a house and you're super young. Maybe you're saving up for retirement. Maybe you're doing something to make tomorrow better. But the point is, don't save up an entire wealth mound and not be able to use that money in the future. But let's say we're going to give ourselves 20 years. So we're going to look at 20 years. And then here's where the magic happens, the estimated rate of return. Let's say I'm going to round it up to 9%. We're going to do 9%. Now look at the big difference here. Your total balance after 20 years from now of investing $5 a day, you're going to get $97,957 at the end of those 20 years. Now what this means though, is that there could be years that you're like negative. So let's say 2022, for example, the stock market was down quite a bit, right? So that's going to look like a bad year. But then maybe the year after, it grows by 20%. And then the year after that, it's down 10%. And then it's up another 30%. But the average out over those 20 years, we're anticipating a 9% return. Now you can be a little bit more pessimistic and put that maybe down to 7%, in which case you would have $77,000. But that's not the point here. If we do the 9%, look at the power of compounding. So if we go back here on this chart, so here you got the total balance and you have what your total interest is, $88, right? It goes back to earlier. It goes back to all the comments. How silly is that? $88? Really? That's not a whole lot of money. Really? Why are you doing this? You're not getting that big of a return, $88. But remember, we're focused on percentage and compound interest because we're smart. That's why you're watching this video. Have a look at the next year. So now we're a year ahead at $4,000 balance, in which case you've only made interest of $348. That's $348 of growth. Still not impressive, right? But let's get to the point. So that's kind of right where I'm at, right? We're about to hit 2 years. The hope would be at an average rate of return of 9%, I'm going to have about $300 of growth. It's well on the way to getting there, right? So all is good. I'm going to zoom up here to 10 years from now. Here we are sitting in the year 2033. My $5 a day has been a total principal of $20,000. So that's how much money I made from my job, or I found from a side hustle, or I found money, right? And I put that money into the stock market. That's me, right? That's my money. But then the stock market returned an additional $13,507. That's looking pretty good now, isn't it? Even better yet, let's flash forward to the 20-year mark. Now at year 20, have a look at what's happening. The money I put in personally, my hard-earned money, was $36,000. That's the money I had to work for. That's my life energy going out the door to try to find a way to get extra money, right? So I put that into the stock market, but the stock market returned a total of $61,000. I actually made more money than the money I put in to the stock market. It only started with $5 a day. Yeah, you might say, well, 20 years from now, but my question to you is, what's the next 20 years going to look like if you don't do anything now? Or if you go chasing different scams because somebody's trying to get you into something that, quite frankly, will make them more rich than you. Instead of chasing the scams, just stick to a consistent plan. So 20 years from now, that would look better than if you don't, right? So 20 years from now, what I want to do is come back to this video and we'll see, how did this work out? Did we get that total interest? I'm going to show you my account. Did I get the $61,000 in total interest, or did it come crashing down? We'll find out. And if it is doing well, let's go out and have a beer sometime. I'll pay. But the other thing that investing does to us is it makes us kind of scared. See, we are actually programmed. Our brains are programmed to lose money. It sounds silly, but think about it. The reason our brains are programmed for us to not lose money is because it is primarily focused on keeping us safe. When words like recession and stock market crash and all these like headlines that engage a bunch of fear come out, we enter that state of fear and say, oh my gosh, I got to protect what's already mine. All of us, I think, have had this issue, especially during March of 2020, right? The stock market comes crashing down. If you were around for the year 2008, stock market's coming down, you're freaking out and you're like, should I just like sell now and just kind of hold my cash until the market recovers? Look at this from CNBC. Nearly 40% of investors who pulled money out of the markets in the last year regret it. So this article is from May of 2022. This is the current events that impacted Americans' financial decisions. Look at that. Inflation, the pandemic, economic policy, etc. They let that fear get to them. They pulled out of the market and down it went. I was talking to somebody, in fact, and they were like, why are you still investing? This was back last year in 2022. Remember, 2022 was bad. I think from June on, it was just a landslide down. I think total, we were down 18%, give or take. So that is scary. And they're like, why are you investing right now? And I'm like, why are you not? And they're like, no, I'm pulling my money out. But the point is, if you invested back in 2021, and let's say you invested up here, and now you're selling down here, you're actually losing money by doing that. You put in $1,000, it dropped, 18% from that, and now you're pulling out less money. That's the complete opposite of what we're focused on. And if you look at this article by CNBC, nearly 40% of Americans are regretting that. Let's not be those people. So during March of 2020, I really focused on my stash brokerage account because that's the brokerage I used most often back in those days. And while it wasn't a lot, because I didn't have a lot of money at that time, I started investing when it was March of 2020 quite rapidly. So check it out. If I go into my personal portfolio right now, $5,127 is my total account. But most importantly, look here. Total returns of this account is at 30.61%. The only reason it's so high at 30% is because I was focused on it when that opportunity existed. Warren Buffett, the billionaire who made billions of dollars by investing the right way, always says to be greedy when people are fearful and be fearful when people are greedy. Now, 2021 was a good example when everybody was greedy. It's one of the hardest things to do. Let money alone when all hell is breaking loose. So even the money right there on the stash brokerage account isn't that good. That percentage is pretty nice, and that's what to focus on. Because as you continue to compound that money, just like we looked at earlier, you're going to make more wealth. The journey of 1,000 miles begins with one simple step. So how's my $5 a day challenge going now? Well, check out the latest update video right here. We'll see you on the next video.